This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. We're going to talk about ADX today. Want to make sure I give a better explanation, or maybe a more detailed explanation, of why the 25 line to me is so important. And, making sure when you're investing in a stock, where it is in relation to where the ADX is in relation to the 25 line. And there is a specific situation where you can buy before ADX is above 25. And I want to make sure I explain that as well. But for the most part, we're looking for pullbacks when ADX is above 25. But let me just show, I'm going to give you 2 or 3 examples as to why I think it's a valuable tool, confirming tool, and a great screening tool. Let's go straight into this first example, which is the Apple daily chart. And, what I wanted to show here is this period here where ADX finally crosses this 25 line is this dark line going across. And what I've said in prior videos is that I'm always looking to make sure that the ADX crosses above 25. And I actually prefer to see it at, say, around 30 or higher at every peak. When stock is making a new high, I want to see ADX confirm by making a peak of approximately 30 before starting to pull back. There are times when you get into a really strong trending move where the ADX will stay above 25 throughout the entire run. And so what I wanted to just point out is I'm drawing a vertical line at this spot, which is where price is crossing above 25. And from that point on, we have confirmation on an ADX basis that we're in a strong trend. One of the things that I mentioned over and over again in prior videos is if the 18 is above the 40 and both lines are rising, you're getting that confirmation that you're in a solid trend. And so if you notice, that is right about the same spot where the 40 starts to rise right about there. And that is really where we're getting confirmation on an ADX basis. So if I wanted to do a screen and say, find me all the stocks that are in a strong trend, you could go and say, give me ADX. And I use the 13.8 version. The DI lines are at 13 and the smoothing is 8. And if you use a 25 line for that specific method of ADX, you cross above 25, you're pretty much getting confirmation that you have a good moving average environment. You're getting that confirmation that the trend is strong. And it's much easier to screen and look for stocks where the ADX is above 25 than it is to try and find, 18 above the 40 and both lines rising. The slope and all that, it's really hard to screen for that. And so one of the things I really like to do is go and screen for ADX. And I do screen for low ADX patterns, but one of the things that I think is important is to go find all the stocks that are in a strong trend, and that's where the ADX is above 25. If you want to use 30, that's fine too. The reason why I use 25 is that I don't want to really miss anything, and a lot of times after a big move, you'll come down to the 25 line and hold, just like this did here in July. And so as long as this blue line, this ADX line, is above 25, you're in a strong trending environment where you can play trend trades. And that means you can go buy pullbacks on this time frame and go down to a lower time frame and play like an opposing trend trigger or something like that. Once you get below 25, and I would argue once you've made a big move like this, once red starts to take over dominance, which is right about here, then you have to stop doing trend trading activities, meaning you don't look for pullbacks anymore on this time frame. You don't want to go down to the hourly and look for a pullback trade, because now you've reached a point, especially right here where the ADX drops underneath 25. You've reached a point where we're no longer in the strong trending mode. Instead, we're in this sideways consolidation. And so what needs to take place after that is you need to go through enough of a sideways pattern that you develop actually some sort of a pattern, either a triangle pattern, either a rectangular pattern, or a ascending triangle, something along those lines that you can draw trend lines on price. And the minimum amount of bars you really need going sideways, I would say, is 20, but I'd prefer to have 25 or 30 in this consolidation phase where you're drawing in trend lines. If we go to the next example, Amazon, it's more glaring because, again, here's where price is getting back above and getting things going. The 18's above the 40. And if you notice here, the 18 and the 40 aren't as parallel, but we've got a really strong trend based on ADX where it crosses right at this level right here. And it stays, basically, it does bleed back below 25 a little bit, but green DI stays well above red DI throughout this whole period, this point right here. And so, you know, if you look at where ADX actually crossed back below 25, now all of a sudden, if you notice, again, we're into this sideways period. And one of the major things I wanted to make sure I explained is that this is where traders lose money. When ADX crosses back down below 25, so you have this whole period where you've been trending to the upside, and every pullback was really an opportunity to try and trade. And then once you reach this point where you cross back down below and ADX gets back below 25, now you're in this mode that I would consider to be kind of like a chopping block where, you know, price is more choppy and sideways, and you don't really have a trend in place, and instead you're just moving back and forth sideways without any real momentum. And so, again, what you need to do in this situation is draw your trend lines in. And so I would draw this trend line like this, and you know, you have a trend line down here. And so I've got this trend line in place, and until price breaks out of this range with this low ADX pattern, I'm really not interested. And if you try and play this for a trending trade, you're going to get chopped up. If you think you're going to anticipate a breakout before it breaks out of this range, your odds of making money are pretty small. Now, you could change your methodology and say, oh, I've got low ADX. I can maybe sell into resistance, say, be a seller against resistance or a buyer against support if I want. My personal preference is not to play this game. It's too hard. It's too much. It takes too much time. The skill level has to be pretty good. I'm not saying not to do it, but you got to have pretty good skill level. I would rather just go find another stock that's in this mode, that's got strong ADX and has a trend, and I can look for pullbacks. And so by using this ADX screen, looking for ADX above 25, you can go find the stocks in this specific time frame that is in trending mode. And then again, you can go down to the lower time frame for your entries and exits. Let's do one more as an example. And if you notice, this is Boeing. And what's taken place really since June, look at how quiet this sideways period has been, and look at how low the ADX band has been for so long. And so once you get a period, like I said, once you reach a period where, let's say you've gotten above 25 bars, in this case it would be 25 days, 25 trading days, or even 30 trading days, you draw your trend lines on price and you wait for a sign that you're getting ready to come out of this consolidation. Now, once you keep consolidating like this, if you want to change the trend line to this, you're absolutely welcome to do that. As long as you have a well-defined trend and something that you can put in place that makes sense, you can put your trend line in. Either way, this gap up would have really told you that things are shifting. And this is really the only time that I'm willing to buy when ADX is still below 25. And that's when I have a well-defined trend line and I have ADX has been below for a long period of time. And then I get a dynamic move through the trend line. If it just comes up just to show, I mean, if you get a little tiny little poke through like that and it doesn't even close above it, or it just barely gets through and there's not much volume or price expansion or anything like that,
Yeah, I'm not as interested. I want to see more confirming action like what we saw with the gap up. Once you get a strong close through, because you got to realize what's happening is you're trying to come out of a low ADX condition where you're going to get some false moves, maybe some attempts to break out. And so you want to see the price volume action confirm that you're really getting out of this zone. Clearly, that's what happened here. And then you actually got a little pinch play, a 2-bar pullback. You could have been a buyer on this bar right here as it took out this prior bar. ADX DI was confirming with the break above, green breaking above red, and then you got the pivot high above 30. So very nice confirmation on that pullback. And so I just wanted to make sure you understand, to avoid the chopping block, you don't want to get involved when ADX is below 25 and all you're doing is chopping back and forth. And the way to do that is draw trend lines on price. And when ADX gets under 25, you draw trend lines on price and you don't do anything until you break out of that range. I hope this was helpful. Please hit that subscribe button and we'll talk to you soon.